Assalamualaikum. My name is Amir Nasuha binti Shukri with matrix number 294679.
I'm Rahafiza Arisha binti Ismail. My matric number is 298524.
Assalamualaikum and hi. My name is Nurfatin Nabila binti Shukri and my number matrix is 299425.
Assalamualaikum. My name is Nur Syahira binti Muhammad Zabidi. My number matric is 299163.
Hi and Assalamualaikum. My name is Miss Nawati binti Vila. My matric number is 298219. We are from Group 7A. Our topic is about investment in Islamic and conventional banking system. So, we will start our presentation with the introduction.
In general, investment is an activity that involves the purchase of tangible asset or financial asset that provide income, capital gains, or both. Investment is also defined as a financial commitment for a certain period of time which aim to generate profit in the future. Investors include individuals, government, pension fund, and corporation. This definition includes all types of investment, whether corporate investment or individual investment in list of stock, bond, and even commodities that is invested trade a fixed amount of money and in the future that money will be more than the total value of the investment that done initially. However, there is a difference between Islamic and conventional banking investment. The Islamic banking system can be defined as a banking system that has the principle of travel and its practice are based on Islamic law, or in Arabic it is called Sharia. This means all operations that are found in the bank, whether money storing or financing matter, are done based on Sharia law, or at least without violating that prohibition that have been implemented by Allah through Sharia law. The use of this principle also cover other bank transactions such as remittances, letter of guarantee, letter of credit, and money exchange. While conventional banking can be defined as a financial institution based on usury, which is the acceptance of deposit with a premium or interest award, contract that the provision of debt or financing by paying charge interest. The interest rate difference between deposit and financing product is a profit for the bank. The form of profit obtained by bank is like liquid asset, which are money. According to the conventional system, money can be classified as a commodity that has a price, where the lender entitled to a return of principal and premium on the money lent.
I will present about Islamic banking and conventional banking system. Islamic banking system. The Islamic banking system operates according to Islamic economic and financial principle known as Sharia in Arabic. Its primary goal is to eliminate riba in bank affairs, particularly among Muslims. The system's main principle is profit and loss sharing, and it prohibits the collection and payment of interest by lenders and or investors. Islamic banking offers investment products that comply with Sharia Islam. There are some products offered by Islamic banking system. First, Mudarabah. Mudarabah is a partnership between a bank and a customer where profits and losses are shared according to the previous agreement. Second, Musyarakah. Musyarakah is a partnership where both parties provide capital for a specific investment or project, which capital collected when profits and losses are shared according to a percentage agreed upon at the beginning of the contract. Murabahah. Murabahah is a cost plus financing structure where the seller and buyer agree on the cost and markup of an asset. And Wakalah. Wakalah is an investment agency where clients provide funds to the bank to invest in legitimate business project, and the client gets a share of the profits according to the agreement. Next, conventional banking system. The conventional banking system is a financial system that operates based on general principles widely accepted in the financial world, distinguishing it from Islamic banking system that operate on Sharia principles. Conventional banking involves taking deposits from customers and granting loans with interest, unlike Islamic banking which prohibits interest use. It produces products with element of riba, as all products in this system are based on interest on the loan amount given to the customer. The conventional banking system offers various products such as saving and checking accounts, personal loans for various needs, home credit which is mortgage, and credit cards. Saving and checking accounts allow customers to manage their money easily with interest usually charged on certain balance. Personal loans are provided for educational, holiday, or emergency needs with fees usually including interest. Home credit allows customers to pay monthly installments, including principal and interest. And credit card allow customers to make purchase and withdraw cash using bank provided credit. In short, Islamic banking provides a safer alternative to conventional system, offering transactions without usury. Profit and interest differ based on contract agreement. Practitioners of the riba system face punishment for sin and hell, while those of Sharia Islam receive reward and paradise. The word of Allah subhanahu wa ta'ala states in Surah Al-Baqarah that repeating the riba will result in eternal punishment.
Next, we proceed with Part C, where the application of investment in Islamic banking versus conventional banking. In the context of global financial landscapes, there are many differences between Islamic banking and conventional banking. These two banking systems differ in their investment practices and the implication of such distinction. The first one is Sharia-compliant investment in Islamic banking. Islamic banking is based on Sharia principles which necessitate ethical consideration and social responsible investment. For example, Islamic banks actively engage in financing halal industry such as Islamic finance instruments, ethical trade, and halal food production. All of this reflect to the alignment of Islamic banking with ethical consideration as well as promoting investment that are not only financially sound but also socially and morally responsible. Contrary, conventional banking operates with a focus which is profit maximization. This is because conventional banks are known to invest in a diverse array of sectors, meaning that their investment often without strict adherence to ethical or religious consideration. Although this conventional banking offers a wider range of investment, but it can affect the financial returns, where the investment can span sectors that might raise ethical concerns, such as industries associated with gambling, alcohol, or environmentally unsustainable practices. Next is Islamic banking with its application of risk mechanism, as we can see through mudaraba and musharaka. When we apply this application of risk sharing mechanism in real world situation, this kind of partnerships can be proven in various projects where the bank and the investor share both profits and losses. So, this collaborative is not only aligned with the Islamic principle but also emphasize the sense of shared responsibility, and then it will contribute to help development of more equitable financial ecosystem. On the other hand, conventional banking relies on fixed interest loans. In real world situation, most borrowers prefer fixed rate loans for long-term loans since they are more straightforward financial structure. But somehow, the lack of direct risk sharing between the bank and the investor can lead to a different set of implications. especially when economic uncertainties arise. Next, the investment practices of Islamic banking and conventional banking play exclusive roles in shaping the economics, where Islamic banking are more to prioritize projects that address to economic and social development, such as affordable housing, healthcare, and education. All of this can help to eliminate poverty among the poorer people and also help to reduce inequalities of income and wealth. While conventional banking, there are more emphasis on profit-driven that aims to generate returns for their shareholders. This will give an impact to economic development where wealth in community increases, but there is an inequality happen between the rich and poorer people. So, in conclusion, the application of investment in Islamic banking and conventional banking seriously impact the development of economic. Islamic banking, who follow the Sharia principle, promotes ethical investment, risk-sharing mechanism, and commitment to social responsibility. Thus, these differences in both banking system provides a way on how each banking system contributes to or the challenges in its application to have a wide goals of economic development and its financial well-being.
For compatibility with challenges, first we have avoidance of riba, usury, maisir and gharar. Islamic banks operate on the principle of avoiding interest-based transaction, which is considered prohibited in Islam. Instead, they offer financing solutions based on profit-sharing principles, such as mudarabah, partnership, and musyarakah, joint venture, or sale and purchase financing, such as murabahah, cost plus financing. By avoiding usury, Islamic banking promotes fairness and avoids the exploitation of borrowers. Islamic banking also avoids contracts with elements of gharar, uncertainty, and maisir, gambling. These types of contracts are considered risky and unjust, as they may lead to disputes and exploitation. By prohibiting such contracts, Islamic banking aims to promote transparency, fairness, and stability in financial transactions. Second, compliance with Sharia principles. Islamic banking follows the principles of Islamic Sharia as advocated by the Quran. This adherence to religious guidelines ensures that financial transactions are conducted in a manner that aligns with the ethical and moral values of Islam. And the last one is halal business contracts. Islamic banking offers alternative business contracts that are considered halal permissible in Islam. These contracts, such as mudarabah, musyarakah, ijarah, bai' al-salam, and bai' al-istisna, provide options for financing and investment that are in line with Sharia principles.
Next, we go to the challenges in investment. For your information, in investment, there are three compatibility between Islamic and conventional banking system. First is ethical compatibility, second is financial compatibility, and the last one is regulatory compatibility. So I will explain the first one is ethical compatibility. In Malaysia, Islamic banking operates based on the principle of Sharia, which emphasize ethical conduct and social responsibility. This principle prohibits involvement in activities such as interest-based transaction known as riba, gambling known as maisir, and investment in industries that are considered unethical such as alcohol, tobacco, and gambling. On the other hand, conventional banking in Malaysia does not have these ethical restrictions and may engage in interest-based lending and invest in a wide range of industries. This ethical difference poses a challenge when it comes to finding investment opportunities that are compatible with both systems. For example, conventional banks may invest in industries which are considered unethical in Islamic banking. To address the challenge of ethical compatibility, Malaysia has taken several measures. The government has encouraged the development of Islamic finance products and services that comply with Sharia principles. For example, Islamic banks offer Sharia-compliant financial options such as home financial based on the concept of murabaha, known as cost plus sale, and ijara, known as leasing. Additionally, Malaysia has established an Islamic capital market which includes products like sukuk, known as Islamic bonds, and Islamic mutual funds that provide investment opportunities in Sharia-compliant manner. Second is financial compatibility. In Malaysia, conventional banks operate on a debt-based system, while Islamic banks follow a profit-sharing model. This financial difference can create challenges when trying to structure investment products that are compatible with both systems. For example, conventional bonds that involve interest payment are not considered compatible with Islamic banking. To address this, Malaysia has become a global leader in the issues of sukuk, which are structured to comply with Sharia principles. Sukuk represent proportionate ownership in an underlying asset and generate returns based on the performance of the asset. Malaysia has also developed a framework for Islamic real estate investment trusts, which allow investors to participate in real estate investments in a Sharia-compliant manner. Additionally, Malaysia has developed Islamic financial products such as Islamic mutual funds and Islamic equity funds, which provide investors with opportunities to participate in Sharia-compliant investments. The last one is regulatory compatibility. Regulatory bodies of conventional banking focus on factors such as interest rates and risk assessment, while Islamic banking regulators focus on compliance with Sharia principles. This regulatory difference can create challenges when trying to navigate investment opportunities that comply with both systems. For example, conventional banks may have complex financial instruments that are not compatible with the simplicity and transparency requirements of Islamic banking. To address this challenge, Malaysia has developed a regulatory framework that accommodates both conventional and Islamic banking system. The Malaysian Central Bank, Bank Negara Malaysia, BNM, has established guidelines for Islamic banking institutions that promote transparency and consistency in Sharia compliance. For Islamic banking, Bank Negara Malaysia has established the Sharia Advisory Council, which provides guidance in Sharia compliance. The council consists of Islamic scholars and experts who review and advise of the compatibility of financial products and transactions with Sharia principles. To promote regulatory compatibility, Malaysia has introduced specific legislation for Islamic finance, such as the Islamic Financial Service Act. IFSA provides a comprehensive legal and regulatory framework for Islamic banking and finance, ensuring that Islamic financial institutions operate in compliance with Sharia principles.
In my perspective, the Islamic banking system is better than the conventional banking system. This is because the activity involved are only halal buying and selling, and there is no gharar in every deal, which is a questionable matter in terms of the source of profit for every investment and buying and selling done. Furthermore, many non-Muslims also choose Islamic banking because it is more user-friendly, free of usury, and promotes socio-economic justice.